Start of the new year, you're assessing and looking to rebalance your portfolio. Adding just 3 stocks to your holding could make for a good year. Adrian Saville, who's Chief Executive at Cannon Asset Managers, joins us in studio now to take a closer look at the proposition they're putting out there. Thanks so much, Adrian, for joining us this evening. So we've got investors, for the most part, still nursing their wounds from last year, with 2018 having dealt globally stock markets quite a bruising. But you've put 3 shares out there to buy for 2019. Before we get into them, just how easy a feat was it honing in on 3 stocks in particular, given that you could top up your portfolio with the World Equity Index trading at 13.5 times forward earnings?
Look, I think for many investors, the most sensible thing to do is to try and match an asset class, whether it's equities, bonds, property. And you do that most effectively through a tracker in some shape or form, which means you get the asset class performance, you get expenses out of your investment returns. And if you take markets as an aggregate, all the way from the global market through to some quite specific markets. Germany, I think, is a great case in point, where if you bought the German index, you're getting 10 times earnings, you're getting a 3 dividend yield with world-class assets, BMW as a flagship. But going beyond the broad market and into the specifics, the sell-off of the last part of last year in particular, I think, has revealed some really interesting, specific individual positions that have been made available.
Yeah, we'll get into that, as I say, in a bit. While we've got the valuation incentive being one thing to consider, it's in the context where you've got local and global uncertainties that you've got to take into consideration as well. And one assumes that hedging your bets is very much part of the strategy, or has to be, moving into 2019.
Not just 2019. I think consideration number one in investing, very often when people approach the investment prospect, what they're thinking about is, how much can I make? And at Cannon, we come from the exact opposite position. It's how much can I lose? Yeah. Because if you lose 100 of 100, no amount of subsequent brilliance is going to amount to anything. 0 times brilliant is 0. So I think risk is your primary consideration in every environment. And I would agree with you in flagging some quite real specific risks in 2019. The trade war has not gone away. I think Brexit will be spoken about more than it will be a real impact, but Brexit will cause anxiety. We're squaring up for some more Trump tantrums. And perhaps the real elephant in the room is the Chinese debt, which has just grown to astronomical proportions. By some measures, we're off the charts. There is this shadow banking system that has developed alongside the formal banking system. And I think these are some of the specific risks that will make themselves felt, along with the unknowns that we will talk about at the end of 2019.
Absolutely. So let's hone in on these 3 stocks then you've highlighted in this context. Then Altaba, and it's best described as the alternative to Alibaba. It's listed on the NASDAQ. The value proposition it's putting on the table for you?
So Altaba gives you exposure to Alibaba, having just said bad things about China. Yeah. I think Alibaba, Tencent, are good things about China. And Alibaba is probably best known for its incredible success with Singles Day, the 11th of November every year. And Alibaba, started by Jack Ma, is now the largest online platform globally. If you want to own Alibaba, you can go onto the Chinese market. You can buy it directly at a reasonably attractive valuation. There is a sort of, but wait, there's more moment, because Yahoo, in its formation, was strategically, I think, very astute. And when we talk about Yahoo now, it's often thinking about, well, the search engine that could have been but never was. But Yahoo used residual surplus cash to acquire assets around the information communication technology industry. And in a stroke of brilliance, genius, 2005, Yahoo acquired 40% of Alibaba for $1 billion. They then sold half of that 40 for $8 billion a few years later, and they kept the other half of their initial investment, which they still own today. And Alibaba is now held, that residual shares held in what was Yahoo, renamed Altaba, which is just a bad naming convention for alternative Alibaba.
Okay, so that's an interesting one. I'm going to blitz through the other two very quickly, Adrian. Sabvest, you say it's the JSE's secret performer, an investment holding group that's been listed on the JSE, of course, since 1988. What kind of track record is it boasting? And if it's so good, why does it fly so under the radar?
Historically, it's flown under the radar because of liquidity. It's been hard to acquire the shares. It's been tightly held by insiders. Through the course of late 2018, there was a corporate action where a lot of those locked up shares were released. So the liquidity, the free float of the share has moved from 20% closer to 60%. You can now buy the share with much greater ease. The genius behind this business is Chris Seabrook. He's the founder. When the company was listed in 1988 to now, you would have received just over 50 times your capital. The JSE has given you 25 times. And I think particularly impressive, in the last 10 years, it has generated a return on investment of about 21% per annum. An extraordinary business.
Adrian, and then, Telkom emerging from what was, once an underdog, I guess, within that sector and making a comeback.
Telkom has been successful over the years of spinning off assets, Vodacom being the most obvious. But in Telkom that you see listed today, we think that there is a sort of a buried treasure, and that component takes the form of a company called Gyro, which is their property business. So Telkom has a market cap of 30 billion, just over 30 billion rand. It's a reasonable sized business. What isn't priced into it, we would argue at all, is a 24 billion rand property portfolio, which includes 6,500 masts and towers. Our suspicion is that that property portfolio will be spun out and could release a capital that unlock could be as much as 40 rand a share on a 65 rand share price.
And that really making the game a lot more interesting moving forward. Adrian, we're going to have to leave it there. Thanks so much for having joined us in studio this evening. And that, just a few tips heading into 2019 from Adrian Saville, who's with Cannon Asset Managers.